Hello traders, Nick Shaheen here reviewing a couple of tickers, a few tickers, let's see how many I get through, that are momentum stocks, beloved stocks, and they're falling. It's hard to catch momentum stocks because actually it's hard to trade them because they don't give easy entrances and exits. So when they're falling, they look like machetes with tiny little handles. Best to let them hit the floor before you pick them up. And when they're rallying, they look like they're going to correct at any point in time. So you wait, and when you finally cave in, it's too late, and then you write it down. So this is Shopify. Good company, fundamentally super strong. All you have to do is just look at the financials, overview statement. You can see how the blue line, which is blue bars, the top line, revenues, everything is headed the right way. Maybe debt to asset ratio is expanding, but they're delivering growth in returns. So it's not a cheap stock. It's got a PE, which is good news. It's much lower than last year, but it's still priced almost 41 times its sales. So it's not a problem. So it won't help it find support, but it's not a reason that they're selling it off. Okay, so looking at it, this is a 4-hour chart. We can go switch to daily chart. I don't think it'll change much. The message is, it looks like it's going sideways, but it's not. You can almost visually slice it in half right there, and they're fighting over it. So there isn't one hard line in the sand, but it's this region. In fact, if you wanted one, it printed it all by itself, which is the point of control, but it's really the whole region from here to here. In theory, left alone, it should find support. You trigger bear if it loses these actual hard bounces. Maybe that triggers some machines to sell it down to the 920 area, 880. If you lose the 880 and 920, we won't have that conversation. But look, my note is get long with an exclamation point, meaning get long with a tight stop, because that should be a fantastic entry point. This should be an entry point. So get long without an exclamation point, because it's a maybe, depends on the market. So it's a momentum stock. If the markets are falling, this one's going to be running much faster lower. Up here wasn't an obvious entry point, but look, so it wasn't it wasn't an obvious short point or exit, but it was definitely not an obvious entry point. So if somebody asked me, hey, what do you think of Shopify on that day? What was that day? April 28th. I would have said, you know what? Why don't you wait out and see what happens? Look how bifurcated it is up here. And it was almost, it had history back here. So what was that all about? I don't know. These are not normal candles in any situation. So here is not the time to exit. For the same reason, here is not time to get in because of these. If I'm long, I'm suffering. I see 3 long wicks, so the bulls are trying above places where they should try. If these places fail, then they could come down to here. We don't know. So take it one level at a time. So if I'm long, I don't panic out right now because I should have not gotten long up here or gotten out up here. If I'm looking to get long, it's okay maybe to try a swing, but stop out. That would be my opinion. I can tell you it should find resistance at 1160 and above. So if it bounces 1120, there should be some sellers, but 1160 more. Anything above 1200, 1240, I would start trimming if I got long here. That's the trading aspect of Shopify. Long term, whoever owns the stock for the super long term, hey, maybe this is the next Amazon. I don't know. I don't think it is the same kind of stock, but I definitely would not discount it. So that is Shopify. What was the other one? Teledoc came up in the chat room. I do have a link to the chat room down below, so you can reach out and try it out for free. The doorway to it is a PayPal transaction for $0. I just need to make sure that you guys are real. Okay. Teledoc on the 4th, I think, May 4th, I warned the chat room of bad things. I said if it doesn't hold here, it's got a lot more to go, which is the unlikely scenario, but you never know. So stop out here. In fact, do I have any stop outs? Okay, so support zones, if lost, lower. So here we are, almost at the lower. I extended to here. Technically, it's much lower than here, but I don't like to do that. I like to go to where the base, and this whole area is a base. Look, this is almost triggered. Look, it says catch it. Try to catch it. And if it doesn't work, this is another place to catch it with more conviction. Exclamation point. So those are notes to myself. I have about 30 or 40 alerts. Catch a falling knife, catch a falling knife, catch a falling knife. When I have that many, I said, whoa, Nelly, something's going on. So let me figure this stuff out, because they're all like this. They're falling into support. Well, guess what? If all of those supports fail at the same time, for whatever reason, we don't know, big trapdoor opens over the whole thing. So this is not the time to catch falling knives, that many. If I'm long stuff, definitely not time to add. In fact, I would add some bears. I shorted X today, and I could short the XLE today. By short, I mean buying puts or put spreads. Very easy, limited exposure, not insulting anybody. I don't need a disaster to make money. I could sell a call spread, but I chose to buy just regular puts. So anyway, this stock is in trouble. It could be hitting. Is it falling as we're talking? Yeah, down 6% today. The technical aspect of it, look at it, much lower, but I give it credit somewhere in the middle to find support here or into here. Okay, not to insult anybody, this is what the charts are telling me. Teledoc is a good concept. I believe in the fundamental and the need for it. The pandemic highlighted that we actually need somebody to say, hey, let's answer a few questions. The revenues is going the right way. Debt is going the right way. Profit margins are dropping a little bit, but that's 2020. So all it needs is this blue line to go up, the cash flow from operations. This way, then management is free to do whatever it wants. Right now, management, if it has a lot of debt, its hands are tied because they have to pass everything through bankers, believe it or not. If you've been in finance before, and if the company is leveraged, then anything you do has to get the blessing of the bank, because they want to make sure you're not burying their money is at stake. But look at this. 1.4 billion revenue rate at a 12 months rate. So that's a lot more than last year. That's which was double the year before that, which was 125% air math, bigger. So they're growing, and it's only 16 times sales. Who cares about the profitability? It's a growth company. So 16 times sales, 17 times sales. That's cheaper than Tesla. Between Tesla and Facebook, how about that? Okay, so not bloated. So valuation is not the reason to get out. Concept is not a reason to get out. It's just going through a selling stint. That's it. It's as easy as that. Okay, beloved ARKK, I would like to warn everybody about ARK. I love the concept of ARK. The company is disrupting an industry that is kind of like, I don't like what Wall Street stands for, because it's like a closed door. If you're not on the East Coast, you're not in with the crowd. I'm on the West Coast, and I'm definitely not from Wall Street. Flip-flops all day, every day is Southern California style, but this is like a fresh breath of fresh air. And I was a critic of her when she forecasted 4,000 on Tesla. Boy, was I wrong. She was right. But the concept, I would like to warn about it. And let me show you one thing. All right, where's my picture? There it is. So if you go to their website, this is their front page, minus these notes and these two red things. I put that. So I read it, giant font. We invest solely in disruptive innovation. So the word solely is counterintuitive. Nobody tells you it's a good idea to put all of your eggs in one strategy. Okay, so that word solely should tell me that this company likes to swing for the fences with every at-bat. All right, it makes for exciting watching, but if you try to copy it, if you're not an expert like them with computers and people behind you, it's going to be difficult. So if you love that concept, why don't you just hire her and do the ETFs? And who cares what companies are in the ETF? If you think she's a genius, just do the ETFs. If you go to see a doctor, you don't study medicine. You let the doctor do what they do. If you go to hire a lawyer, you don't study and you say, hey, let me give it a shot. You let them defend you or sue for you on your behalf. So here, they're saying solely, all the eggs are in one basket. For a large portfolio, that's pretty reckless. It doesn't suit my style. And I race cars, and I fight for a sport. So I know risk. And I grew up in the war, so I know risk. I can't look my family in the eye and tell them, hey, this is a good idea. Let's just put all of our eggs in one basket. Strange. However, hey, time will tell if she's going to survive that way. Disruptive, that's the second part. So all the eggs in one basket, and disruptive is as speculative a word as you get. So innovation and disruption means nothing that's going on now. It means whatever good that comes out from that is yet to be seen. Take it on faith. So all the eggs in one very speculative basket. This is my interpretation of their front page on the website. If this is what drives all of their decision-making process, you need to know that. That's my opinion. So I did some homework and I went long ARKK several times and made some money. I just shorted them with a lottery ticket, but not really. If I wanted to short them technically, maybe I could pick that if the market's correct, they could fall to 90. But on a technical basis. However, they are falling into a band of support. These two candles are very telling. It was a top, it was a top, it was a base. Defended. And here they are, defending it. So where they closed today is pretty important. Because Friday, they defended it successfully. The day, whatever that day was, Thursday, I'm sorry, and whatever that day was. Success. And today, if they fall below it, it's not the end of the world because it's pretty close to call, but it's just, what if the market has a tizzy on Tuesday? This one needs all the tailwinds it can get. If you look at it, one drop, consolidation level, and then another drop could ensue. Not a forecast, it's a possibility. So I literally bought a 50 cent put here a couple weeks out. So who knows? It's a lottery ticket on the downside. I looked into what's in this ARKK. The top 10 are like 45% of it, and they're excellent companies. There's Tesla in there, there's Spotify in there, Shopify is in there. Square, I believe, is in there. Maybe Baidu or JD, I can't remember. So all good companies. So I don't have beef with that. This is a speculative bet that I can get behind, at least half of it. I don't know what the rest are, but at least the top. Look at Tesla today, down precipitously. Ooh, said that one, right? Almost 6%. So it's contributing to this one. 11% of this is Tesla. So at least 0.6% air math of this drop is Tesla alone. And I like the stock of Tesla right now, how it's behaving, but check it out. So you've heard of inverse cup and handle. This looks like they had a giant rally. They came back to a neckline. They had another effort and failed miserably compared to that giant rally. Miserably, probably a harsh word, but failed with much worse outcome than this, and came back. I'm trying not to upset people, and came back to the neckline. If you lose the neckline, then it becomes a trigger lower, and technically speaking, it should have about this much of downside. I don't give it immediate credit for that. I look left and I see that there was a huge battle right here. Therefore, it should find support right here. Just like I'm confident of this, I'm confident that if it comes back to 120 and 125, it will find huge sellers. So if I buy the dip here, I should make sure to trim or book my profits into here and buy it above 130. You hear that? So if I get long here, whoever does that should look into booking profits into 125 and maybe re-engaging above 131. Onus is on the bulls to say, that's not overhead supply. It sure is. Look left. This is the busiest point in contact. So let me zoom in to eliminate. Okay, so now I zoomed in to eliminate older trades. This volume profile, this is TradingView, by the way. I don't get paid from them. They let me play around with the platform for free, but I don't get paid for them. So check it out. But it adjusts on the fly for the point of control. And the closer I get, the more important this line is. What is a point of control? This is the line where it was most active, most buying and selling. Literally, these are volume bars that tell me when they happen. These are the volume bars that tell me is at what price. So it looks like this chunk happened somewhere around here the most. So whatever, all of these add them up. These two are head and shoulders above everything else. So this level is not going to be butter on the way up. That's my interpretation. If you are an active trader, then you should get into tinier candles. So this is a 2-hour candle. It shows me 112 is going to be sold if they can overtake 1.8. 116 will be sold harder on a bounce. 121.50 and of course 128 is the trigger. When I zoom in, I have that. If I'm a faster trader, I should get into 5 minutes, but that's just getting pretty wonky. But hey, intraday, 104.20. God help them if they lose it today. and the selling points are 106 and 106.50. There's going to be sellers. Overcome that, maybe you get a chance at doing this, but there's resistance all the way up, and it's easier to drop from here. My interpretation. Okay, this is a 5-minute chart. All right, hopefully that is good enough information for bulls and bears. I disclosed my position. I have no positions in ARK. In fact, I did. I'm sorry. I just bought the puts, so it would be in my best interest if it drops down to here, but I can forego the $55 for the people who are long. And I don't have a position in Shopify. One thing about Shopify, I stopped trading it because the spreads in options are horrible. You can't get a quote. You can't get a good fill. And to do single legs is just too darn expensive, and it just moved too fast for my taste. So I just avoid it. I could be convinced to sell naked puts in it as it falls fast, because I would not mind owning shares on the way down when I disagree with the selling. I'm not going to buy calls and hope for the pop. I have made money on that, but it's just too much of a hassle, so I skip it. What was the other one I covered? Shoot, I can't remember. Anyway, that's it. Nick signing out.